Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report about a fund that invests in credit, and it's a real head scratcher. It's like trying to predict the weather, but instead of rain, we're forecasting investment returns. It's going to be a bumpy ride. This report gives us a snapshot of Carlyle Credit Income Fund as of July 11, 2025 and shows how they are doing. The main takeaway is that their net asset value, meaning the value of their assets minus their liabilities, was 6.51 cents per share as of June 30, 2024-5. Before we begin, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can chat with other investors and get your questions answered. This filing is a Form 8K, which companies use to announce important events to investors. Think of it as a quick update, faster than their regular quarterly or annual reports. The most recent event that triggered the filing was on July 11, 2025. The fund has two types of shares traded on the New York Stock Exchange: common shares under the ticker symbol CCIF and preferred shares under the ticker symbol CCIA. It's good for investors to know, but we mostly care if that investment is doing great. Here's the meat of the report. As of June 30, 2025, the fund's unaudited net asset value, or NAV per common share, was 61 shares. The net asset value is the value of the assets owned by the fund minus any liabilities, divided by the amount of outstanding shares, in this case, common shares. So basically, for every share of common stock, if the fund was liquidated, an investor would get $6.51. Now, what does this all mean? Well, a single data point by itself is not enough to tell someone how the company is doing. Unfortunately, that's all we have in this report. To understand the performance of the Carlyle Credit Income Fund, we'd ideally compare the 6.51 NAV per share to previous periods. Is it higher or lower than last quarter or last year? Are the assets in the fund of great quality? That would tell us if the fund is growing, shrinking, or maintaining its value. We'd also want to look at the overall stock market and the performance of similar credit income funds to see how Carlyle Credit Income Fund stacks up against its competitors. This would give a better sense of whether the fund is outperforming, underperforming, or just keeping pace with the market. Our Credit Income Fund stacks up against its competitors. This would give a better sense of whether the fund is outperforming, underperforming, or just keeping pace with the market. Without this context, it's hard to say definitively whether 6.51 sin is good or bad. It's like knowing the temperature is 70 degrees, but not knowing if it's July or January. However, the filing is an 8K. This indicates that the announcement is important enough to be immediately shared, which means that it likely deviates from what the expectation was. This can be for positive or negative reasons. On a high level, the fund's direction is uncertain. Without more data points, the fund's success depends on managing risk, especially in a fluctuating credit market. Changes in interest rates, economic downturns, or defaults on the debts they hold can all significantly impact their NAV. Carlyle Credit Income Fund will have to carefully navigate these challenges and capitalize on opportunities to generate returns. Alright, that's our quick look at Carlyle Credit Income Fund's recent filing. What do you think about their current position and the challenges they face? Share your thoughts in the comments below. If this analysis was helpful, please hit the like button and subscribe for more corporate deep dives. Also, don't forget to join our Discord channel in the description for more in-depth discussions. Thanks for tuning in, and I'll see you in the next video.